Good day, I'm Dr. Suresh Rama, Head of Rates and FX Strategy at RHB Group. Today our topic is high FX volatility amidst rates curve inversion. The VIX index has edged lower, quoted around 24.5 from 27.71 at the end of June, suggesting risk aversion is easing on the equity market front. However, the Deutsche Bank Currency Volatility Index remains rather elevated as hedge cost is still deemed to be expensive. Volatility is quoted around 11.29% compared to 10.29% at the end of June. Brief pullback in the dollar is likely to provide relief rally for G10 FX pairs and opportunity to profit take on upticks. On the policy front, we note the European Central Bank raised policy rates by 50 basis points to 0%. This was the first policy rate hike since 2011. Euro-dollar 3-month 25 delta risk reversals have stabilized at 2.31%. But FX options market eye movement in the spot rate before reversing the trend in risk reversals. FX markets still seeking an opportunity to short the euro dollar as put prices on euro remain elevated compared to call prices. A move up in euro dollar spot towards 1.03 and 1.035 will be key given expected knockout barriers put in place at those levels. Breaching those levels would likely trigger stop loss for a firmer spot and reversing the current trend in euro-dollar 3-month 25 delta risk reversals. On the rates front, we note curve inversion has been pronounced in the spread between US 10-year Treasury yields and 2-year as yield spreads invert to 21.6 basis points from a positively sloped 85.8 basis points at the beginning of the year. The spread between the US 10-year yield and the 3-month US T-bill spread in the meantime has also sharply flattened to 54.03 basis points from 156.48 basis points at the beginning of the year. Further aggressive rate hikes by the US Fed at this month's FOMC meeting, which we have penciled in another 75 basis point hike, is likely to amplify the inversion. In the US interest rate swap space, we note the US 10-year IRS and 2-year IRS spread has inverted to 41.7 basis points from steepness of 72.5 basis points at the beginning of the year. We note the market is leaning towards playing float and receiving fix at the long end of the interest rate curve compared to the front end of the curve, while the front end 2-year IRS continues to price in tightening monetary policy by the US Federal Reserve. The long end 10-year IRS is increasingly being sensitive to growth and recessionary risk ahead for the economy. In the meantime, we note dollar positioning against Asian currencies have also increased sharply for the week ending 14 July. Refinitiv survey data showed bearish bets on nearly all Asian currencies firmed to new multi-year highs as fears of an impending recession from rapidly rising interest rates to reigning sky-high inflation dampened sentiment. Short positions on the Thai baht, peso, Sing dollar were at the highest since 2018 at plus 1.78, plus 2.06 and plus 1.44 respectively. Pessimism levels on the CNY remain largely unchanged at 1.07. Thank you for listening to this podcast. Wishing you well on your trading and investments.